Good morning or good evening, depending upon what part of the globe you're on. You're here on Winner Take All, where we talk about the constant battle between large tech monopolies and traditional incumbents. Very excited to say that I'm joined by Fritz Demopoulos, the founder of many platform companies, joining us live from Hong Kong. Thanks for joining us, Fritz.
Guys, it's great to be here. I'm happy to chat.
Awesome. So we're going to dig into a bunch of what Fritz has created over an illustrious career here, and he's certainly not done. Probably just getting started as we dig into it with him. Also, obviously, have Nick Johnson here with me, co-author on Modern Monopolies. But for those of you that don't know Fritz, you were educated here in the U.S. You were at UCLA Anderson, and that was late 90s. And then you decided to go to China, right? I mean, how did that compute for you? Had you spent much time there growing up or something? But how did the decision to say, all right, I'm shipping off?
I had never lived in China before. I was an exchange student once in Hong Kong. And when I was living in Hong Kong, I was very much enamored with the vibe of the region. I was just super excited to figure out a way to get there. And I was lucky that, when I was still in graduate school, I had an opportunity to work for News Corporation. That's part of the Murdoch empire. And they were looking for a few people to send to Beijing to help kickstart some of the operations and investment, strategies in the country. And it was just lucky I happened to be one of those people. But my initial plan was I thought I'd be in China for a couple of years and then maybe somewhere else for 2 years, and then I'd be back in the States, being a lackey in Southern California, fighting, other drivers on the 405 getting to work. But that didn't happen, and I've been in the region now for 22 years.
Were you learning Mandarin while you were just, you landed there and you said, okay, now I got to start learning Mandarin? I mean, that's a little bit of a barrier.
It is. What's amazing is, in some ways we're critical of the communists, but the one thing they do very well is, they educate their people. They have exceptional universities and they really have high standards. And there's a lot of people who speak English in China. And frankly, I think there's more English speakers in China than there are Americans. Now, of course, it's various levels, but I think, broadly speaking, rule of thumb, there's 50 million people in China who speak English pretty well, and well enough that you can do business with. And so that's a lot of people, wow. and they're excellent, and we can work with them and engage with them, and sure, yes, like I learned a bit of Mandarin along the way, but it's always a bit choppy and not as eloquent as my Chinese colleagues who speak English on a very high level.
Wow. Okay. And especially in the late 90s, that's impressive. So, so you were working at News Corp. You were in the media and the news industry, and then you decided to start this company called Shawei in 1999. And this was an aggregator for domestic news, magazines, just generally news content. But there was also what I've read up on. It says, there was a unique community and interactive features. Would you say that this was there was some like platform dynamics going on with this business, or would you say it was kind of more of like an aggregator of a few large kind of news conglomerates that you pulled together? Or did the platform kind of true platform stuff come later in your career, or how would you describe Shawei?
Yeah, I think Shawei was a Web 1.0 company. Oh, by the way, Shawei means brave shark in Chinese. And so we definitely had a different name than all the other players who were trying to take over the sports industry. But we aggregated content, but we also created content. We had a huge editorial team because we realized as a market-driven media company, we could be much more effective than the state-driven media companies in China. And so we had stringers and journalists all over the country writing about sports, interviewing people. So we were very much a content generation engine, but we also aggregated, just like many of the hybrid models today do the same thing. Was it a platform? I'm not sure, because what we discovered with sports content is that it's like water; it goes to the point of least resistance. And so there's a lot of water out there. And so we did run up against a number of competitors. Our advantage is we were first. We had a great name, and we had a little bit more vision on how we thought the media industry in China would evolve. Mr. Murdoch once mentioned to me that, Fritz, we make money in the sports business. And I'm like, oh, that's interesting. Maybe I should do a sports startup. Right. It's pretty much how it started. Were there network effects? You could say they were branding related network effects, possibly. But I suppose the barriers were not as high as we would have liked them to be. And so we had a number of other players, trying to catch up. It was a great business. SoftBank, IDG, Intel, they were all investors. Masa-san from SoftBank, even in 1999, he was thinking about China, and he invested in a number of companies. And obviously Alibaba was his most successful, but he invested in us and a few other players as well.
And it reminds me of what you were saying about being first, right? There's a quotation here from you. There's too many smart people in China, too many people who can execute. There's no way you can compete just being a better operator. You have to be first. You have to do something that no one else is doing. If everyone is doing virtual reality, maybe you should be doing something else. And I think that goes to your point. Is that your kind of crown principle rule in China, maybe Southeast Asia as well? If you want to win, you have to be first.
You have to be first. You have to be different. There's too many smart people in the world, and I think Chinese DNA. People are really smart and they're really driven. And can you out execute someone in their home market? Probably not. But can you be first? Sure. If you have a bit of vision and strategy, and so I totally believe that.
Yeah. So anyway, it worked out pretty well. You were rolled up into Tom.com, $20 million acquisition. You were what, like 25 at the time, something like that? Roughly around there, mid-20s.
A little bit older than that.
Anyway, I don't need to put you were in your 20s. You were doing just fine for yourself. This was your first startup business, right? Had a good exit, I'm not working, I don't need to work for the rest of my life kind of exit, but a really strong exit. That's an amazing accomplishment. What do they call foreigners in China? I'm gonna butcher it anyway, like Gaijiu or something like that, or
Yeah, right. Right. So the Cantonese, they would say Guilo, and for the Mandarin, they'd say Lao Wai. Right. Exactly.
So you come in, you have an exit. You had a couple co-founders on this.
That's right. I had a couple co-founders. One was Malaysian, and one was mainland Chinese.
And so then you were working at NetEase, which you were at. I think you were there for a couple of years, maybe post acquisition. Which is also an online portal of sorts, pulling together a number of different content things and community things. And so then Qunar, the big gorilla. Tell us about that. How did where was the kind of idea for inception on that? How did that all come together? I assume you didn't have Murdoch whispering in your ear about like travel is going to be a big thing. We got to do that too. So what's the background context there?
Yeah, so we had a different inspiration. I think there was a couple. Christy Boostout, she works for CNN. She's one of the correspondents, and she was interviewing this entrepreneur, Edward Tian, who's a famous Chinese entrepreneur, and she said, Edward Tian is a serial entrepreneur. That was the first time I heard that word. What, serial entrepreneur? What does that mean? Well, he's done more than one startup. He's done 2, 3, 4. And I'm like, oh my gosh, that's what I need to do. I can't just do one startup. I have to do more than one. I have to get out of working for the man and although I had one successful company, I realized, you know what, you have to be a serial entrepreneur. And so that was one inspiration. And then so me and my co-founders from the sports website, actually the same team, we were chatting and talking, and we were at a Starbucks at the Hong Kong Airport Express. I remember this very vividly. And we were saying, well, so what are we going to do? We're talking about it. And then the idea came up. I think it came from Douglas, one of my co-founders, who said, well, maybe we should look at, where does Google make its money? So back in 2004, Google was, one of the hottest companies, still is, obviously. And it was like, okay, if Google is this big, this massive Leviathan, where does it make its money? And even if you took a piece of it, even one small piece, you could also be, say, a mini Leviathan. I know that's kind of an oxymoron, but, we thought about it, and then we did some analysis, and we realized that travel was one of Google's biggest revenue verticals. So we thought, well, heck, if that's one of their biggest verticals, why can't we build a better mousetrap just in travel, be better than Google in travel? And that was really the genesis of, how Qunar started.
Awesome. Now, that was 2005. The other major competitor, which we'll talk about more in a minute, was Ctrip. But when I look at Ctrip's thing, it says Ctrip started in 99, but was Ctrip kind of doing like other stuff, and they hadn't really focused on travel that much? And so you weren't exactly first, but you were pretty much neck and neck with them when you started, or would you say that they had a little head start?
Yeah, so they were way ahead of us, but they had a different business model. So we always thought, so Ctrip is an online travel agency, and our whole idea was, following the Google analogy, Google aggregates multiple agencies, and that's how we thought about it. Okay, we're a new model. We're going to build a better mousetrap than Google. We're not competing with Ctrip. We're just aggregating, information from Ctrip and a wide range of other, travel companies into one larger offering to consumers. So that's how we thought about it. Was initially, we never thought Ctrip was our competitor. But what's funny in the world is once you get really big, everyone's your competitor. I mean, frankly, Google is the competitor to President Trump. They're the competitor to Amazon. They're the competitor to the fashion websites. They're a competitor to everybody. And, because once you get big enough, you start bumping into everybody. That's what happened to us. We were trying to collaborate with Ctrip. We worked with all the other online travel agencies and airlines and hoteliers and all that sort of stuff. But then once you get super, super big and dominant, you realize that they work for you. You don't work for them. And, then we started becoming competitors.
So could you buy a Ctrip, a flight through Ctrip off of Qunar in the early days?
You could, absolutely. And, they sued us, but we included Ctrip on the platform, sure. Yeah, I mean, we felt, in the early days, like our philosophy was, hey, we're a search engine, and we follow the nature of search. And the nature of search is you aggregate all the players, you have a wide array of offerings, which means that you're a proper search business. That's how we thought about it. And it was actually clearly defined. We had to work with the government and the legal authorities to kind of define exactly what the nature of search was. But that's how we started, again, because our genesis was, hey, Google's a search engine, we're a search engine.
And where was Baidu in all of this?
Yeah, I mean, sure, Baidu was there too. And eventually Baidu was able to gain in prominence and obviously take Google's lunch. Obviously, yeah. So you're right. I mean, travel was one of Baidu's large revenue verticals as well.
And would you say it was more like airlines or hotels? Or I assume that mix changed over time. But when I look at airlines, that supply is much more aggregated or consolidated, rather. And the hotels, there's probably some big hotel players, but there's definitely more fragmentation on the hotel side. overall, at least. I don't know about initially, but how did you think about kind of supply fragmentation, or was that even much of a factor at that point?
Sure, it was. I mean, I guess I couldn't communicate it as clearly as you've just communicated it, but yes, flights. I mean, there's only a few hundred airlines in the world. In China, there's maybe 20 major airlines, I guess. I mean, there's 6 domestic and some of the foreign airlines, and so it was much more consolidated. But what we discovered was there still was massive variation in price and offering, and so really, consumers needed some sort of platform to help them make smarter decisions. In fact, our vision was we help consumers make better decisions. Really simple. Which is completely different than what Ctrip and Expedia and all the incumbent travel players were thinking. They were thinking, how can we help airlines sell more? That's how Ctrip thought about it. How can we help all these suppliers sell more? And we were like, how can we help customers make better decisions? So we were coming from, you could say, a different side of the universe, although both of us were approaching the same point in the universe. And I was just going to say, like on the hotel side, you're right. It's a bit more fragmented. We were lucky that when we started, there weren't as many chains, but then the chains started to emerge, and we were their partners and helping them, in different ways and helping consumers navigate that.
I heard a story. We talk about kind of like platform hacks. You got to kind of fake it till you make it in the early days. You may have one side of the ecosystem, but not both, and you need to do manual hacks to connect the dots in the early days. Sometimes even in the later days too, but especially in the early days. One story I heard, I don't know if this was true, might be about Qunar, or might be Ctrip, or might be both of you, is that someone would order a plane ticket off of the website, and then literally a physical courier brought them the ticket, like hand delivered the ticket to them. It wasn't a digital ticket, but someone came to their hotel or wherever the office and said, "Oh, here you go. You just bought this thing online, but here's the ticket physically." Was that true?
Yeah,
Did that stuff happen?
Yes, it's true. That was Ctrip was the founding company in that space, and so keep in mind, in 2005, when we started Qunar, that was the year that the Chinese government said all tickets must be e-tickets. So they mandated it. And so we didn't know that. It was just we were lucky that the year we started our company was the year that the government mandated that. Kind of before that, 2001, 2, 3, 4, whatever, you could have these physical tickets. And so Ctrip, enterprising, entrepreneurs, they're like, okay, how do we take advantage of this? Well, if a customer wants to buy a ticket, we'll just deliver it to them. People are cheap. They had motor scooters. They had some sort of route planning algorithm to get people, and in fact, I remember using Ctrip. I remember I was at a Starbucks with a friend having a cup of coffee. I literally called Ctrip on their exceptional call center, bought the ticket. Someone just showed up at the Starbucks and delivered it to me, and I paid them in cash. And so it worked. And so that was in the early days. It was kind of like, like a lot of these successful companies, including Ctrip, it's like, we don't care if it's digital, whatever. I mean, you can scale people. Ctrip's key insight was you can scale people, you can scale processes. It doesn't have to be all digital, right? It doesn't have to be all machine driven. And so, they did a great job. I mean, we came along as Qunar a few years later when everything was digital. And so we started to disrupt the category, starting with digital. So we didn't have to get our hands dirty with all that, physical stuff.
Yeah, that's absolutely hilarious. But yeah, I mean, you gotta give the customer what they want, right? And if the customer wins, the platform wins.
Exactly.
So Qunar, over a period of you went public 8 years later on the NASDAQ. But what were some of those? I mean, what were some of those? Is there a defining moment you would say, getting from 05 to 13, where the company was on the line, or you were about to go, say, belly up, or you just had to grit your teeth and grind, and somehow you made it through? But was there any kind of singular defining moment in that journey to IPO that you can remember?
Yeah, there's a few. For the first 4 years, I mean, the business was growing, but it had not captured the imagination of the markets of people. And like, I remember people telling me, why don't you do a social network? There's this guy Zuckerberg in the States doing that. Why don't you do that in China? That's what they literally were saying, so why are you focused on travel, right? Although it was weird because it made so much sense that consumers needed a tool to make better decisions, right? Not helping airlines just fly more products, right? But for the first 4 years, I mean, the traction was okay, but like the thing is, like, we weren't growing like crazy. I mean, like, sure, we're growing at 3 times a year, but all the big social companies were growing at like much faster. And so I think I wouldn't say we were stuck, but we were like growing moderately. We were going under the radar. Everyone who used the tool said, this is a great service. This is a real service that provides real value to consumers. I mean, we were helping consumers save lots of money for sure. But it wasn't growing like a Facebook or a MySpace or kind of whatever.
Through basically Q3 of 2010, you'd raised an aggregate about $27 million US. So, I mean, it's a chunk of money, but it's not the massive, hey, we're just flooded with insane amounts of demand kind of growth that you're talking about.
Yeah, totally. And, frankly, I mean, of all the money we raised, we only spent $7 to go from 0 to $1 billion, right? So it wasn't much money, right? I mean, you can be extremely capital efficient if the competition isn't there. If the competition's there, then
$1 billion in sales, right?
No, just value. The value of the company.
Value.
Right?
So it's profitable. I mean, or you had,
we had some profitable quarters, but we were just growing moderately. We were just smart with our capital. We had to be more creative. We weren't just, frankly, if you have too much capital, like, you're just not creative. I mean, here's a question. Why do all the movies in Hollywood suck? I mean, literally 90%, 95% of the movies suck. It's because there's too much money. And so these directors and producers and writers, I mean, no one's really creative. I mean, it just is really bad. And however, if you have a constraint, i.e. capital, and maybe there's a people constraint and some other constraints, you're actually just much more creative in how you do things, and you actually become much more efficient. And, and we had a constraint in that case. We had not captured the imagination of some of the other verticals. And that allowed us to, you could say, operate under the radar. I would say we were, not on purpose, but we were in stealth just because no one bothered us, or no one bothered to look at what we were doing. And then finally, when they figured out we were valuable, it was too late, right? We're just like taking off, right?
Right.
And maybe one of the key turning points could have been when one of the key large airlines in China told us that we controlled a third of their business was coming through our platform. And we thought, oh, we control a third of the business of one of the largest airlines in China. Then that must mean we must be pretty big.
Yeah, that must mean we're a pretty big deal. Now, would you say it was more maybe about like a timing thing, consumer expectation, just kind of the consumer readiness maybe? There wasn't kind of any magic kind of breakthrough. And you just were able to relatively slowly compared to the socials, let's say, just continue to build up this business. But then for Baidu to then lead the $300 million round in 2011, was that just more of the same thing? Eventually, was there anything that Baidu basically said, look, I'm not going to try and compete with these people anymore. I've got to partner up with them.
Yeah, sure. We were eating their lunch for sure. We were killing them within travel, right? And that was their key revenue vertical. And in fact, we weren't even getting much traffic from them, so they knew that they had to work with us. I mean, and we obviously had choices. And at the time, we thought, well, Baidu is an engineering driven company, and so are we. And so it seemed like kind of a complementary fit.
Yep.
And so, they pretty much kind of allowed the company to, you know, pretty much operate on its own, and kind of follow a very singular vision, right? Which is to help consumers make better travel decisions.
Now, was there any deeper integration with Baidu? Like if I went to Baidu and I punched in a travel search, do they give you preferential treatment on the listings and that kind of stuff?
Yeah, of course. Yeah, of course. Yeah. Yeah.
Good. I would hope, $300 million, you got to get some other goodies thrown in. So, that really, then you had that breakout. It's interesting because just yesterday we were talking about Expedia. So I don't know if you followed this, but Barry Diller basically, fired the CEO, CFO of Expedia. They missed earnings pretty badly this past quarter. They blamed it on Google. So did TripAdvisor miss earnings. And what you see are the large platforms like a Google are now, once they hit kind of monopoly, like mature monopoly status, they start to take advantage of the suppliers, their producers, in this case, other third-party websites like travel being, their biggest moneymaker. So I was looking at the Google search rankings yesterday on the show. It took 2 full page scrolls until you get to the organic search results on Google for travel. And you can just see how, right? The first page is all ads. The second page is their hotel booking little widget. The third page are now organic search results. So what was really interesting, though, is what you were saying, that Baidu really wasn't giving you much traffic, that you were able to become a destination of sorts for people looking to do travel, which reminds me of when we were looking at Alibaba and the infamous war between Alibaba and Baidu, where Alibaba blocked Baidu from scraping any of their product listings because they had the same philosophy, which was, I want to be the shopping destination. And I don't want people to go to Baidu first and then come to Taobao or, whichever marketplace it was. But you didn't go to those extremes to block Baidu. Somehow you were just able to build a sticky enough experience that really resonated with customers and they kept coming back to. Is all of that assumption kind of pretty spot on, or am I missing something there?
That's exactly right. On one hand, like if you talk to the senior executives at Expedia, even the ones who are still remaining, they'll tell you the biggest competitor is Google, right? It's not Booking.com, right? I mean, absolutely. Because as I mentioned before, once you get big, you're everyone's competitor. And so like spot on that, 2-3 pages. I mean, obviously Google's being sued in some markets because it could be viewed as anti-competitive, and maybe they're sacrificing user experience a bit, possibly. Kind of in a mobile world, there isn't much real estate anymore, right? And so, and if Google has has all their own products, it's kind of difficult for someone else to kind of squeeze through. And so maybe from Google's perspective, they're going to have to think carefully about, publishing versus editorial, right? And, user experience versus monetizing on their own. In China, you're absolutely right. Jack Ma's a genius. He didn't want Baidu scraping because he didn't want consumers to get used to the fact that Baidu would be the gateway, right? And obviously 50% or 60% of Google's revenue and Baidu's revenue is e-commerce related. And if Alibaba controls e-commerce, there's no way that they would want someone else to be the gateway. And so, Jack was absolutely correct in, blocking Baidu, right? And even today, obviously, Alibaba's search business, and they have a search business, you could buy ads, it's almost like a search alternative. By buying ads on Alibaba is, even bigger than Baidu, right? That revenue stream is bigger than Baidu's revenue stream, and the concern, of course, in the States is, if Bezos has his way, he wants Amazon to do the same thing, right? and I'm sure in this case, Bezos is probably going to copy Jack in some ways and, do that.
And Amazon has built up just like that in the last couple of years, a very big advertising business. They've actually started to take market share from Google. I think last year it was a $5 billion business, and it's growing super quickly. So they're definitely following that playbook.
Yeah, totally. And the funny thing is, and they haven't done any work, and they've made $5 billion. Can you imagine if they do some work on it?
Yeah, you turn on the switch and 5 billion. It's not bad.
Totally.
My opinion of it is when you become that large tech monopoly status like a Google or an Amazon, you have two customers because you're a platform. The regular traditional consumer, yes, they're your customer, but so would a Qunar be a customer to Baidu. So would a Ctrip be a customer. So would Expedia, Booking, TripAdvisor, Yelp be customers to Google Search. And they're paying them. And when the platform gets really big, the platform doesn't take advantage of the consumer customer. They take advantage of the producer, the supplier customer. And so at least in the US for antitrust regulation, we look at, do you put the customer at a disadvantage? And I think what all the FTC, the DOJ get wrong is they're looking at the traditional customer, the consumer. What they don't realize is platforms have two customers, and the new customer is the supplier. And if you look at what Microsoft got in trouble for in the 90s, it's the same thing. It's on the supply side. And I do think if you want to try and compete to facilitate a more competitive environment on Google Search, you can absolutely start to say, hey, is it fair? Am I promoting a competitive environment if the first 2 pages of Google Search are basically all paid for ads that you have to pay the toll keeper to get access to? No, I don't think that's actually facilitating a competitive environment because all, as you said, right, Expedia, Booking, Trip, all of them are saying, I need to get off of Google and I need customers to come direct. It completely gets rid of the whole point of a search engine, and their growth is now, plateauing, at least on the top line side in terms of usage. And so they've got to crank revenue and EBITDA from somewhere, and that means I squeeze supply. I don't think it's a good thing from a competition standpoint. And it's an easy way for Google to beat earnings at the expense of really having to truly do business model innovation. I don't know if you have thoughts on that, but that's my rant on it.
Yeah, I agree. I think, when the competition authorities or whatever they're called, right, whatever the Federal Trade Commission gets involved, I think there's multiple angles. There's a lot of nuance. We have to be smart about it, right? And we have to think carefully about, platform. For example, if everyone goes to mobile, maybe Google is less prominent, right? Of course, they own Android too. That's a problem, right? But but yeah, we have to think. I'm glad you said it, right? There's different types of clients and customers, and we have to take all those into account. Maybe right now it's good for consumers, but when someone has market power, they're tempted to just help themselves, right? And all this stuff, do no evil and all that sort of stuff. That's well, okay, then let's put it in the law, right? That's on the law, right? But obviously, they don't want that, right? And governments, frankly, you can make an argument that the allocation and distribution of information in a society requires local accountability. Local accountability means either local ownership of that entity or some sort of laws and regulations. And unfortunately, Google is everywhere in the world except for a few countries, just like Facebook is. But Zuckerberg doesn't care about people who live in Malaysia or, frankly, Hong Kong or Taiwan. He only cares. Frankly, his comments and everything. These mega platform owners only care about themselves, frankly. And sometimes, we need local accountability, right? Just like the banking system, right? How come there's banking laws? Because you can't take someone's deposit in one country and just blow it in like another country, right? We have laws and regulations so that you could say the distribution and allocation of capital requires local accountability, and the same thing with information. And yes, like we all love the benefits of global scale. Like Google and Facebook are great because they've achieved global scale. Hence the cost is much lower and we have all these great services, I suppose, right? But, political discourse and information and things that are valuable to society, kind of go out the window, I think, unless there's some sort of local accountability, right? So if you're in France and Google France somehow is doing things that are more accountable to what it's important to French people, for example, right? And, that doesn't exist. And like I would go so as far as to say is academic studies in the United States at UCLA and Stanford very specifically have shown that countries around the world that have local accountability for the allocation of information, i.e. their media businesses, tend to be more democratic. They tend to be more accountable to the people. They tend to be better governed. And, these guys in the Valley, they're like, yes, scale, machines, like if you disagree with them, the first thing they say is, you don't get it, right? Isn't that what they say in the Valley? You don't get it. I'm a genius and you don't get it, right? But I think the reality is, like we're going to have to balance, I think, the benefits of global scale, and I'm a beneficiary of it, with, local accountability. And, in this case, the Chinese are smarter than everyone else because they're like, forget this. We want to control our own information infrastructure, right? And because they think, hey, the people at Baidu, Tencent, Alibaba, Meituan, ByteDance, all these, guys are going to be a little bit more accountable to them, and to what's important to the Chinese people than maybe whatever Zuckerberg's values are, right? And to me, I think it's an important issue. And frankly, the academic studies that were published in the United States show this, but I don't think you'll ever find them on Google, right? If that makes any sense.
Well, no, I agree with you. So I've said, look, tech protectionism, China's done it better than anyone. And guess what? Do you think that you would have 6 out of the top 10 largest tech companies in the world being Chinese if the Chinese government didn't incubate its ecosystem from the large tech, US tech companies, now monopolies, from coming into China? I'm not saying that to discredit the ingenuity and the innovation and the drive and the hunger of the Chinese entrepreneurs. But what I am saying is they help to create that environment to level the playing field and make it a local activity. And I think it's absolutely helped for the better. And I think you're starting to see maybe like in India try to take some blend of both of this, be a little bit more open, but have some rules in place. We've kind of seen it around like marketplace rules that they put on what did Walmart buy in India?
Flipkart.
Flipkart. So you can't be a retailer and a marketplace if you're a foreign owned entity, so they're playing around with it, but I'd say they've absolutely done a great job with it. And I give them credit for having put that all together, which I think is part of your point here. So I'm totally with you on that.
Yeah. And the funny thing is, shame on the Europeans for not doing this, right? Just having Amazon.
It's the lost generation in Europe. We have the ETF Platt. 10% of the companies in Platt are from Europe. And a third of them, it should be more, but they're not all OTC. Some of them are OTC, are from China. It's unfortunate.
And again, and this is completely separate from, political issues. I mean, like, do I agree with what's going on in the region and China and all that? Well, yeah, like I have my concerns like a lot of people do. And, but like, I get that people want to control their own destiny, kind of like regardless of the politics and human rights and all that sort of stuff, and shame on the Europeans or the Brazilians and the Mexicans for not doing it, right? And just controlling it, just setting up the barriers, I think.
Absolutely.
I think the bank analogy you mentioned is a really good one too. I've said that, You have banks, you call them systemically important because they impact a lot of other stuff. There's no reason that a lot of these big tech companies shouldn't also be considered systemically important. And then with that, you'd probably have a lot of that local responsibility regulation that would come with that. It makes a ton of sense.
Totally, yeah, exactly right. That's the best way to describe it. Like, I mean, it's good you said it that way. It's good.
Yeah, Nick's former career as an economist, coming into play here. But so anyway, I love the conversation about competition, and I love the way that the competition plays itself out in China. Right around 2015, so you were now public, but you had these like massive platform mergers, right? You had the two DDs for ride sharing merge. You had the Yelp-like kind of platforms like Dianping and Meituan merge. And then Qunar and Ctrip did this share swap, which is all kinds of interesting. I've never seen this one before. Who came up with this? But basically, just to give the recap for everyone, there was a share swap and voting share swap, which means the two companies were still separate, but you essentially had a truce and you had different levels of ownership and voting rights. But the point was that you both had a real vested interest in one another. And so you were going to take down the competition a notch and have this truce, which was not a merger, but kind of like the impact of these mergers that you saw, kind of. So it goes back to the point that platforms have this winner-take-all dynamic, and there's only one or two dominant winners. How would you describe how all of that came together? The Qunar Ctrip share swap, that kind of truce, so to speak. Really interesting.
I'm not an investment banker, but I guess they thought that that structure made the most sense. But I think on one hand, we want to. It was obvious that we had to have a combined platform to achieve some of those scale benefits, some of those winner-take-all benefits that you've highlighted. At the same time, are we able to encourage the animal spirits of like individual entities, right? That's what Barry Geller is faced with at Expedia. For years, he's encouraged silo thinking, i.e., the animal spirits of the various entities just fight it out. He didn't care, and it worked well. And then and Mark, the former CEO, thought, what, maybe we can extract some benefits if somehow we push back on those animal spirits a little bit and try to achieve some scale benefits instead. And that led to all sorts of execution challenges and impact on earnings and stuff like that, right? And so I think that was going through their mind when they considered that, that sort of mega merger. Unfortunately, after that merger, and it really was a merger. It's just, you're right. There was just some like investment banker approach, right? Maybe for legal and tax reasons, it was done this way, right? I'm not an expert. But then, unfortunately, this company called Meituan started emerging, which is also very strong in travel. And they've done an exceptional job, and they work with Booking.com now. And like Wang Xin, the founder, is just an amazing guy. And then Alibaba with their Fliggy, which is their travel platform, they continue to make investments in travel. And so, although, like the two major players who were fighting it out, Qunar and Ctrip, decided to have some sort of détente. I think we only had a 5-minute break before we started seeing, some of the other guys, like popping up.
Well, I guess it's probably a good thing that they did that then, to take on these other gorillas coming into the space. So, let's look at what you're doing now. You invest with Queens Road Capital. You're a VC fund. You're putting dollars into live streaming. You're very big on education. healthcare, both in China and Southeast Asia. You have a number of really interesting portfolio businesses that you've already put dollars into that have at an early stage and have gone on to raise many others subsequent rounds of capital. But besides space and ET, what gets you, what are you really excited about from an investing philosophy? Is it still those main areas? What do you see the future in China and Southeast Asia for the trends you're most excited about today?
Yeah, I'm super excited about education. I think, governments do and anytime governments are involved in anything, they tend to do a bad job. And, because of, I guess because of social networks, I know we were just dissing them, they're able to keep for-profit businesses more accountable too, right? So I guess that's good. I guess that's a good thing about Zuckerberg. All these reviews and rankings, meaning even if you're a for-profit education company, you have to exhibit good behavior still. And so I think, parents are realizing they have to take more control of their kids' education. It isn't just you ship them off to K-12 and that's it, and then the state is responsible for your kids' education. Now it's more and more, parents have to be more involved. And then, so there's tons of interesting companies and approaches popping up, whether they're assessment tools, new forms of, educating kids and classes and all that sort of stuff. And so I think private education is just a mega opportunity globally. And, in some ways, that, what was it called? Varsity Blue or Blue Shield, whatever that thing was in Newport Beach when they arrested that guy and all those Hollywood people. What was that? That guy Singer, that scandal about getting into USC and all those other schools.
Yes. The paying off the professors. Yeah.
Yeah.
Someone
right,
paid $500,000 to get into USC, which I actually think that's a good thing for USC. I don't know who's paying $500,000 to get into USC, but anyway, yeah.
It was certainly a compliment to USC, that's for sure. But I kind of feel like that's reflective of parents and other stakeholders just having a high desire that their kids are really educated, right? And they're involved in this case, getting involved in great institutions, but it could be learning languages and other things. There's just this deep desire. And because a lot of people have lost faith in, the public institutions, and they've lost faith in the fairness of the system as well. The last thing I'm going to do is sound like Elizabeth Warren. That would be horrible. But, we certainly have lost faith in our public institutions. And like my bet isn't to give the public institutions more money and just taxing everyone. And I'm kind of the opposite. Let's have the private sector take some of this, right? And because, they've proven to do a great job. JP Morgan's a private company. Facebook's a private company. Google's a private company. Uber, they've all provided exceptional value to consumers, right? And so, I'm super excited about that, broad category. That's one area that I'm excited about.
And I've always said that, China, you see China leading the US in terms of platform trends in a number of areas. Certainly we've seen it historically with messaging. Alibaba is bigger than Amazon in a GMV standpoint. Other areas like healthcare, but maybe education is also in there as well. You put money into this Zhuishang company, but it's kind of taking like a marketplace approach to, say, education, and where you don't really see, particularly in the US, and for both healthcare and education, you don't really see that many platform companies there. The big boys, the Google and Apples, are trying to get into healthcare. They're also doing stuff in education, but I wouldn't say there's much of a really strong marketplace approach as of yet. This company looks super interesting. How does that work? I'm sure you're doing other things in education, but it's just interesting to think about a marketplace model in education. How would you kind of give us the brief overview on this?
Yeah, Zhuishang, we have 10,000 sellers on the platform. They're all private education companies. Everything from certification programs, language learning, study abroad, internships even. They're all on the platform. So consumers can discover, rank, and actually purchase various products. I mean, it's amazing to see that many private education companies, right? I mean, New Oriental, which is one of our investors, obviously, it's probably the world's biggest private education company. And obviously, Shindongfang or New Oriental, it's all about English language and test prep, right? But that's massive, right? And Michael Yu, the founder, he's a visionary, and it's just amazing, right? And there's a bunch of other companies. What is it? There's probably 10 or 15 NASDAQ listed or Hong Kong listed Chinese education companies. It's way more than the States, right? And so things are happening. I mean, part of it's cultural. People just care about education more. They value it a lot more, right? And part of it is we're in this emerging market, which is just growing by leaps and bounds, and consumers and parents are willing to try new things. And then people are just highly ambitious, right? Studies have shown that Chinese are much more optimistic about their future. Anyone who's optimistic about their future is more willing to invest in the future. And so we see that too. And I think all that is just coming together.
Absolutely. Okay, so we're going a little bit over. It's been fantastic having you, Fritz. Last one. Now, this one's awesome. So this is kind of like saying, okay, you've built your businesses. I don't know if you're going to become a founder again for anything. You've got a pretty good situation figured out here. You're investing in a number of businesses. You're moving a number of portfolios forward. But let's talk about Melon. And so you see a lot of tech founder billionaire types looking at space, whether it's the Bezos and now Richard Branson, the Larry and Sergey big with Verily and trying to kind of invest in technology to live forever, basically. Ray Kurzweil, all these kinds of, kind of like I'm a platform tech founder, and what are the literally the moonshot, the space shot initiatives that I'm working on. Now you have Melon, which is a conference that I don't know if it's yours, but you've helped bring together people to talk about extraterrestrial life. And I'll be the first one to say, I absolutely think there are other life forms out there. It's just such a big universe. We don't know really anything about it. Our knowledge is here. There's so much stuff that we don't really understand, even just about our own world, let alone this thing called the universe. I think it's out there. You may call me, people may call me crazy, whatever. But what are your interests? What are your interests when it comes to space, extraterrestrial life, these kinds of things? I'm really interested in it.
Yeah, when I was a kid, I guess I loved all that sort of stuff. And, sometimes, life gives you a chance to follow some of the passions that you had when you were a kid, right? And Melon was, it's just the first step in that direction. It was a conference which we brought in scientists and sci-fi writers and thought leaders. And I recently joined the SETI Institute as one of the board of trustees. And so we're, doing a lot of, and obviously SETI is based in Mountain View, and we have 100 scientists, and they're all focused on whether it's astrobiology or looking for technosignatures or planetary formation or origin of life stuff. So I mean, I'm like intellectually, it's amazing. I think, when you're 5 years old, you're only fascinated by a few things, right? Aliens, dinosaurs, volcanoes, spaceships, stuff like that. And, given the chance to, explore some of those. And I was always a big fan of SETI, like even 20 years ago. And I've just been, grateful that, Bill Diamond and Seth Shostak and Jill Tarter from the SETI Institute were able to welcome me to kind of like participate in, their adventure and their vision. And, and like you, I mean, I believe that, like we're not alone in the universe. There's 100 billion or 200 billion galaxies, and every galaxy has 2 to 500 billion stars, and every star on average has a few planets. I think we know that. And there's a lot of research being done at MIT, even Google's and, even Sergey and Larry, we have to appreciate that, they seeded this amazing telescope called the TESS telescope, TESS, which is managed by MIT. And, they're looking for planets within our neighborhood, and the government's getting involved, and, with like the, James Webb telescope, which is being developed by Northrop, Grumman, and that's supposed to launch in a year or so. And so there's all sorts of cool stuff. And so on one hand, it meets our need as, human beings, we have a need to explore, and we have a need to be creative. We have a need, of course, to affiliate with people like us, like all that silly social stuff, but, and we have a need to achieve, I think, and hopefully we can do all those in some sort of, interesting combination. And yeah, so I'm excited about it. I mean, I think, Seth Shostak, the senior astronomer at the SETI Institute, likes to talk about, so he calls it the real estate theory, like, of the universe. It's like, this is this huge universe, right? Massive. And like, why would you build all this real estate but only have one tenant, right? That's how he thinks about it, right? and it makes total sense to me, right? And so like, we're just right at the start, by the way. We're just right at the beginning of this, search, and because of new forms of technology and new science, to give you an example, in 1995 was the first time scientists could definitively prove that there were planets outside of our own solar system, meaning planets from like orbiting other stars. That's 1995. So all this Star Trek and George Lucas and Star Wars, where we had planets and spaceships and all that sort of stuff. Well, that was all theoretical, right? But only in 1995 did we actually, like, two scientists in Switzerland were able to prove that, right? And of course, they won a Nobel Prize for it. And now we've discovered 5,000 plus planets, and with only looking at like a drop in the sky. And so there's going to be tons more. And so this is a massive renaissance for planetary scientists, to just, really understand our environment beyond our planet, and possibly life, and, answer some of those big questions that, way back to the ancient Greeks, they've been thinking about.
We're going to leave it there, Fritz. That's a fantastic note to end this on. It's been an absolute pleasure to have you on the show. Enjoy your evening, ladies and gentlemen. Fritz, dialing in from Hong Kong. Thanks again for joining us. Such an amazing, just story, career, and I'm sure there's going to be much, much more to come, and we look forward to following it. So thanks for joining us. Have a great evening.
Gentlemen, thanks. All the best.
Okay, that's it. That's a wrap. That's winner take all. Early morning session. Hope you appreciated it. That one was awesome. On Monday, we're going to have D.A. Wallach, a noted and very prominent healthcare biotech investor, join us Monday evening, 6 p.m. Eastern. Don't miss out on that. That's going to be also a very fun one to join in. So talk to you soon.